Canadian home prices expected to drop 19% according to another economist at TD. Yep, that is running the headlines on this week. And when we're talking about that, now the other article that we're going to be talking about is the fact that Blackstone is going to be picking up or potentially investing a lot of money into multifamily student residents and what that means for us as people who live in the GTA. And then the final topic that we're going to be covering today will be the fact that Ontario, and there's a huge divide right now, whether that the 2.5% maximum rental increase for 2023 is actually good or bad, it's too high or too low. So these are the topics we'll be covering on this week's reaction video. And if you find yourself kind of like in a very peculiar kind of space where you think your prices are going to come down 90% between now and say 2023, and you're wondering whether you should sell, you could book a strategy call with me using the link on screen right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run a RE/MAX brokerage in the GTA on top of making awesome real estate content for you on YouTube, just like this one. So the first article we're going to be talking about is obviously the one that's grabbing all the headlines, which is Canadian home prices expect to drop 19% by 2023 TD. Look, there's been so many predictions out there and people always change it in prediction, which is perfectly fine because like I've been saying, new data, new output, right? So what I find funny is some people always take this too serious and too literal without actually looking at some of the data, but I mean, stories.com has this broken out. So this is what we're going to be going through. They're expecting right now that all in all by 2023 from peak to trough, meaning the highest point. So the comparison of how badly things will be in the future is always going to be bad because we're starting from the peak, not like we started from January 2022, right from the highest point, which would be in February 2022. They're saying that we're going to have sales drop 23% and then 12% the next year in 2023. So what that means for you is, remember, sales doesn't mean price. What it means is that the number of transactions is going to drop. So what I showed you over here is I pulled up the history of the trend on that. And we're looking at the sales data over here that I've highlighted, not the price. So last year we had a record-breaking 121,000 transactions, which is bonkers. It's like almost 10%, 15% higher than the other one of 2016. So coming down 20% from that, cool, we're back at 100,000, which is still above the norm. And you come down to 10%, call it 90,000. Maybe we're hovering in the 2014, 2017 range. Nothing to be freaking about. I would not be overly concerned, right? Again, I'm applying this from a Canadian lens to Ontario lens. And then the next one is saying that the price drop will be an average of 19% from the top. Again, very, very catchy headlines, but if you actually look at some of the, oh, no, that is the housing outlook. If you actually look at some of the numbers over here that I'm showing you, you can see that it's accumulation, again, from the top to the bottom, and it's really not that bad. But this is, again, the 90% is for all of Canada, right? So again, being us focused in the Greater Toronto area, let's just look at Ontario. And you can see that the average home price, they're expecting up to be 24.9%, which means it's still increasing. Again, because we had a massive increase and we're coming down. And then next year, we're going to have 3.8%, and then we're going to be down 10% by the end of the 2023. So is this something to be freaking about? I mean, yeah, you could. It really depends. Like if you're trying to sell your property and you're concerned that prices will keep coming down, you have to adjust for that. And this is kind of what I've been saying. Like you need to know where your situation is and whether you should sell and take these kind of predictions by economists, like with how much grain of salt you want to be using, right? Because while I do agree with that prices can be coming down, there's a lot of things that are going to be at play, right? Like one of the big things that you have to factor in is that they're looking at and giving predictions on the overnight rate that the Bank of Canada increases or decreases. So right now, I think we're at like 1.5, right? And they're saying that by the end of Q4 in this year, it's going to be 3.25. So TD is expecting some more rate increases to happen by the end of the year. And if that is what they're expecting, I actually think prices are going to come down more than what they're expecting. But if they're going to say that, hey, rate's going to remain stable for a year until the end of 2023, then you know what? Instead of that year where prices are coming down, I think they're going to stabilize. Not go up, not go down, but they're probably going to stabilize because the rates are one of the biggest driving factors of the market right now and where the sentiment is. So again, if you are trying to sell a property, look at this and kind of think critically about whether this is a prediction you want to actually hold on to. And I'm not saying that prices aren't going to come down, because realistically, if you look at the headlines that TV said, they're saying that they're down 90% from peak to trough. But when you look at just the Ontario numbers, they're really not as bad as what some of them have made them out to be, right? When you just kind of look at the average annual growth. So I actually think the headlining number that they're using, obviously to lure you in, is a great number. It has a lot of headlines and it causes a lot of like emotional reactions. But if I dig deep into it, it's really not that bad. It's really not that bad. I actually thought they would be a lot more bearish than this, but who knows? That's just kind of how TV comes off at. I think maybe if Scotia comes up and updates their forecast, it'll probably be worse. Scotia's always been the one that's a little bit more bearish on the real estate market. If you found this type of content useful, it probably means other people will as well. So make sure you help us spread the knowledge by smashing that like button. And while you're at it, just subscribe. Subscribe to their channel. I see a lot of you who are watching aren't subscribed. Just subscribe. We're trying to hit 10,000 subscribers soon, so please subscribe. Thank you. Right, now moving back to the next article, right? And this one is kind of causing a lot of headlines. It kind of freaks people up. I'm going to break it down for you so that you're not freaking out as much, right? Because guess while prices are coming down, people are looking at this, they're saying, Blackstone, world's largest real estate investor, sees significant, I'm doing air quotes here because they haven't, opportunities in the Canadian real estate housing multifamily rental property space and more, right? Now, Blackstone bought a whole bunch of single-family residential properties after 2008 in the great financial crisis in the US, and a lot of people are saying, hey, look, Blackstone's going to come and chase this. What I can tell you is Blackstone's a big-time investor, and they're generally chasing yield, and the yield in Canada generally is not that good because our prices are high and the rents aren't that great, right? But if you kind of scroll down into this article, you can see in this article where it says, there's no intention of investing in single-family homes in Canada, so you don't have to worry. Where I think Blackstone is coming in is because when you look at our economy, and I actually very much agree with their analysts and how they're arriving at this conclusion, Canada has, especially like Southern Ontario, Golden Horseshoe, has a ton of immigration coming. I'm not talking like that immigration stuff that everyone's talking about where like 400,000 per year. I'm talking about students coming in. It's like wild, wild west up there, right? Because everybody wants to come to Southern Ontario for school. So you got U of T, Ryerson. Yes, I'm still calling it Ryerson. You got McGill, you got Queens, you got Waterloo. We got some really good universities in the little pocket of Southern Ontario. And these universities, they make money by bringing in international students where the tuition is much higher. And these universities don't actually build enough student rents, right? So it means that private landlords such as ourselves are the ones providing the student accommodations. And when they're increasing so much international students, that just bring them in, because the mandate is that, hey, look, if you're coming over and you're a doctor, we don't recognize that you're a doctor and licensed to be one. So the idea years ago was to bring them here so that they can do school here. After they get their student visa, they get a work visa, then they get a PR status, right? That's kind of the idea. That's kind of the immigration dream when they come to Canada. I know this firsthand because my family's going through it, right? So the idea is to bring them here, and then when you have so many students coming, BlackRock, the analyst is like, look, there's a huge demand, a lot of people are coming for school, and you know what? Nobody other than the single family kind of investors who are, turning a house into a 5-bedroom or something is being able to provide housing for all these students that are coming in, because housing is generally only guaranteed for the first year. So there's a lot of interest in kind of creating apartment buildings that are purposely dedicated for students, and you can charge a good amount of rent. Like when I was in Waterloo, when Condo started coming up, right, you could rent the whole, unit out that's really small, that has this private bathroom and a washroom for like $1,100, right, which is a lot of money at the time, and it still is, but I think it's like 17 now. But those things were like twice the price of like a room that I was renting on the nicer side, just like a house down the street, right? So when you kind of put the economy of scale that BlackRock can produce, then that's when they're basically going to be able to build these rental purpose buildings or student purpose rental buildings, and then they can have really high yields on them. It's kind of like people coming in purpose-built rentals in downtown, but they're just targeting students. So I agree with their methodology. And you can see here where it says, student nodes will not be in the downtown Toronto, for example. And if you're looking for student housing, Kingston has a big case for student. I think they spelled Kingston wrong. Anyways, I agree with them, because the piece of land for you to build in Toronto is way too expensive, right? If you're not going to be able to charge as much rent relative to the cost of it, it doesn't make sense. But if you go to Kingston, where Queens is, land is cheaper, you can build there. You could go to McGill, or like even Waterloo, if there's land to be developed there, and you can turn it into rentals, your yields are higher because your cost of development is lower. So I totally agree with what BlackRock's doing. I don't think it's going to affect the market in any negative way, because we do need student housing anyways. And if you can take the student housing that are being used right now by single family homes, right? You take that stock out and put them into apartment buildings and you service what's needed, then that means it provides a lot more rental stock for like regular families to live in that city where there's a university, right? So it makes total sense. I 100% agree. Nothing to be concerned about. Then you got your last article here. Ontario says it's limiting the max rent increase for 2023 to 2.5%, and critics say it's too high. Without sounding biased, look, 2.5% is much better than 1.2% that we got in 2022. But me as a critic of this, I think it's still too low, because we have to remember, all of this is adjusted based on what inflation is. Inflation just came out at 7.7%. So you are telling me inflation is an all-time 30-year high and my rental increase is only 2.5%? You know what? I think it's too low. But the kind person in me is like, you know what? If renters are having a hard time dealing with inflation already and like, you know, their balance sheets aren't very good, then yeah, a 2.5% increase may still be too much for them. And the reason why I bring this up is because it depends on which side of the coin you're looking at, right? And I made this analogy before, like you, the viewer looking at me, I tell you, look, I see the palm of my hand, and you tell me you see the back of my hand. We are both correct. It's just we can't meet in the middle to understand and empathize with one another, right? And being on both sides and having rented before when I was younger, I can empathize with the tenants. So generally, I always look at my tenants on a case-by-case scenario, whether I can increase the rent. Because from a landlord's perspective, look, my cost goes up, my variable, my interest goes up, and all that stuff adds to the cost of me servicing the house. So if they want to continue staying there without me having to sell it, I do have to increase the rent and I have to do what's right. But on the off side, if people are already struggling and they can't afford the rental increase, then obviously that's going to be a detrimental thing for the tenant. And this is where you have kind of sides coming in. You got a lot of like NDP people right now saying, hey, look, when tenants are moving out when it's vacant, they're trying to clamp down on the rent control, meaning that you can't even increase your rent between tenants, which is going to be a huge problem. And there's this thing, I think it's like that in New York. And I think if they have that, it's going to be massively detrimental for the market. And I think it's going to scare a lot of landlords out. And then you got the flip side where you have the Liberal Party coming out and just providing one-time, subsidies and rent relief to tenants. And at the end of the day, that subsidy goes straight into the landlord, right? So it's kind of like everyone's trying to tackle the problem at the same thing. And ultimately, I've talked about this many times before, the problem is the debasement of the value of the currency. You cannot print your way to it and you cannot control your way to it. I may be very, right-wing, right? Where I believe in a free market and we have no free market anymore. And that's just kind of where I stand. But at the end of the day, everyone's trying to tackle the situations and the problems right now, and depending on where you are on which side of the coin, your perspective is going to be different. And I can empathize with you, but I'm just providing you my insight from kind of having owned properties and offering renting. And I actually think 2.5% is actually quite fair. I actually think it's quite fair because normally it's like 2%. It's a little bit higher than normal right now. But yes, inflation's 3 times that. But you know what? At the end of the day, I think the landlords who are doing real estate investing properly have a little bit of a buffer to survive some of this. Whereas I think the chances of tenants feeling the pain of inflation is probably a little bit higher. So I can live with something like that. But obviously, some critics still think it's too high. But to each their own. Now, if you're looking at all these content and you're like, you know what? I want to work with Zhen, whether it's buying, selling, or getting ready to buy or sell in this kind of turbulent real estate market, you can book a call with me using the link right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya.